Should the Bank of Canada cut yesterday?
I believe they should have, and I think that they will live to regret passing up the opportunity. You mentioned the word uncertainty. The word uncertainty in the press statement showed up 10 times, okay? Showed up twice 6 weeks ago in that press statement. They cut rates 25 basis points. And when you have uncertainty, you don't just stand pat, because uncertainty itself, just on its own, is a drag on economic activity. It causes households to raise their savings rates as they become more cautious at the expense of discretionary spending, causes businesses to focus on balance sheet strength and liquidity preference. We modeled out uncertainty. The first economist to actually model uncertainty was John Maynard Keynes. You can model it out. There are measures of uncertainty, and that alone. And the uncertainty is not going away. I don't care how many telephone conversations Donald Trump is going to have. This elevated, you're talking about a 3-4 standard deviation event. That's not going away until 2028. It's going to be here with us. And it's going to cause private sector spending to freeze up. So I found it a little bit strange that the Bank of Canada chose. I mean, the markets were 50-50, Bay Street economists 50-50. But just the uncertainty alone, notwithstanding whatever happens on the trade and tariff side, the uncertainty alone is enough to drag GDP growth in this country between 1 and 2 percentage points against the baseline. The baseline right now is a bit above 2%. So you're talking about just the uncertainty, the heightened level of it, enough to push GDP growth to zero.
The bank presented 2 scenarios yesterday, and it pushed back against the notion that these were projections. They want them described as scenarios. And as you know, the more pessimistic one called for a recession, said a recession was possible this year and inflation about 3% possible next year. And then the bank, as you would expect, deflected and pushed back against a question as to whether they were seeing the potential of a severe recession. What do you think? You're chuckling.
I'm chuckling because it's borderline ridiculous. I mean, the second scenario, what they call the worst case scenario, they said there's multiple scenarios. They published 2. Okay, scenario 2 should be their base case scenario. That should be their base case. Okay. Scenario 1, which is that we have a kumbaya moment and all the stuff Trump's talking about just unwinds, that's not a scenario, okay? That's just a pie-in-the-sky view. If I was advising the Bank of Canada, I would say make scenario 2 your base case. And that base case means that the disinflationary output gap goes to 1.7%. Ergo, the policy rate should be heading to or below 2%. So they passed up an opportunity, Paul. What more can I say? What did we just see in March? We saw in March that the CPIX, which is the most reliable core inflation metric, we just saw it come in negative 0.2 month over month. We haven't seen that since May 2020. Just came off a month of net job loss in this country. This is all before the trade uncertainty hit a new crescendo after April 2nd, Liberation Day. And then you showed the Canadian dollar, which has been spiking. Of course, that's commensurate with the broad-based sell-off in the U.S. dollar. But you had, somebody here had Ed Devlin on yesterday, my good friend, who talked about that. He thought he was leaning towards a rate cut, I believe, kept an open mind, because financial conditions in Canada have tightened since the last Bank of Canada meeting. You've had a higher equity and debt cost of capital, and you've had the Canadian dollar strengthen. And then you've had the incoming data come in, and you got all this uncertainty. The uncertainty is not a reason. I know that's what Jay Powell says. Jay Powell says, in a dark room with furniture, you just stand still so you don't get tripped up. Okay, but the United States is the country imposing the tariffs. The country imposing the tariffs, their importers pay the tariff. Then they pass it on to the consumer. The inflation risk country is the United States. It's not Canada. And for some reason, the ECB today figured it out. Their overnight rate's 50 basis points lower, with underlying inflation the same or below or higher than it is in Canada. And I don't know why the Bank of Canada chose to stand pat. I don't care what the markets were priced in, not priced in. The question is, what's the right thing to do? By the way, one of the ways we're going to have to fight this tariff war is through the currency. It is through the currency. And the Canadian dollar right now is going the wrong way. If you want to protect Canadian industry, now it always creates winners and losers. There's ways through fiscal policy that we can protect the losers. You sanction a weaker Canadian dollar. The Bank of Canada really only has one real instrument, and that's interest rates. And now it would have driven those interest rate differentials between Canada and the United States further negative and had the Canadian dollar come down, okay? Because that is one way we're going to fight this trade war. So that's the way that I see it. So the Bank of Canada missed an opportunity. It's not the last meeting of the year. But I firmly believe the way that I'm seeing things going, and actually, as I said, my base case is their scenario number 2, which means that rates are still going to be headed substantially lower between now and the end of the year.
Okay, in our next conversation, we're going to talk about the U.S. economy. Before we let you go on in this chat, you've had lots to say about what you think a new federal government in Canada should be doing in this current circumstance. You've written some great pieces in the Globe and Mail. I don't know if you watched the leadership debate last night. I did not myself, but what are you hearing in the campaign, and are you taking any comfort from what's being proposed in the campaign?
Well, firstly, I'm very disappointed that everything comes down to Donald Trump and that somehow people believe that Mark Carney is going to be the better prime minister to deal with Donald Trump, even though he's never met Donald Trump. Neither has Pierre Poilievre. But I'd say that the campaign proposals so far have been, I would say, rather tepid for the battle that we have.
You want tax cuts, correct?
We need to be big and bold, okay? Like basically the Liberals plan to do what? To cut the lower band for the lower income household, 14% from 15%. Paul, that's not economic policy, okay? That's social policy, fine. I'm not going to push up against that. But we need to cut corporate taxes in this country, but nobody's willing to do it because it's not going to buy you votes without understanding that 70% of the Canadian public work in a corporation, God forbid. You see, what Donald Trump's trying to do, he's trying to attract capital and jobs out of Canada and into the United States. What are we going to do? We're just basically nibbling around the edges. What's Dustin Ontario doing? We're fighting this through what, the LCBO? We have an Alberta premier who's she's no nationalist, she's a provincialist. So yeah, we have to have a big, bold tax strategy, a la Brian Mulroney. May he rest in peace. I wish you were around today. Believe me, we need to make Canada tax competitive. Okay, that's the way that we will keep capital, physical capital in Canada. We have to make it more attractive for foreign investors to come into this country and create jobs. And yet, the only thing I've seen close to it is Poilievre's pledge to eliminate capital gains taxes. At least that's a start. But you know, our corporate tax rate, top marginal rate, is still 5 percentage points higher than it is in the United States. We never redressed that gap that was created when Trump cut taxes back in 2018. Nobody talks about it. And you know why? Because it's all political. How are we going to get votes talking about corporate taxes? Meanwhile, that's going to create investment and jobs that are lacking in this country. So that's where I fall out of it. I'm actually extremely disappointed.